Good evening, Anshuman. Let others also join in. My day was wonderful, Anshuman. Thank you so much. Good evening, Darshana. Good evening, Atulya. Let everyone join in. All right, I can see the chats now. So, friends, what were we doing in the previous class? We were doing standard costing, right? Shall we now just go and do a lot more problems on standard costing? The last chapter pending for us to complete. Okay. I think we did a problem on planning, and there were more questions on planning and this thing, right? I gave you a homework. Did you do the homework? I think 3 is the next question that we are supposed to do now, right? 3 is a problem on reconciliation at the same time planning and operational variance. Let's write down the basic data together. I'm good, Abhi. Long since I've seen you here. All fine at your end? Just a moment. Okay. I'll now write down working note number 1. Starting, Raj. We have just started now. Basic data. All right. So now, Kony, based in Kuala Lumpur, is a Malaysian subsidiary of a Japan. Okay, the principal Malaysian business includes marketing, sales, after sales service, etc. etc. Kony has set up a new factory in Penang to manufacture and sell integrated circuit Q50. So they are, what's the name of the company? Kony. Kony is producing and selling what? Q50XN. They have just copied Sony, my dear friends. Exactly. Revati. If Shiva will keep that name for his kid, his son's full name will be Koni Shiva. Alright, let's get back over here now. The first month's production and sale is given over here. Alright, first month's production and sale. Revati is in good form today, friends. 2000 units. Alright, down they have given the standard selling price. The material cost is given, the labor cost is given, etc. etc. All right. So, friends, from this, I can just go and find out BP. BP is the budgeted selling price. That is told to be how much? 50. Budgeted price is given. BQ is given. That is also given as 2000 units. Am I right? Let's continue reading. X 10 units. So I can say SQ is also given. SQ is 10 units. SP is also given. How much is SP? 2.5. It is not rupees, it is RF. Alright. So I'll continue writing here. We got SQ, SP, we have SH, that is 6 hours is also given. SR is given as 2 RM per hour. Everybody clear so far? From this, we have got the budgeted contribution per unit also. That is BC. BC is 13 RM per unit. Down they have given the actual results. First, can you write down till here in your books? RM should be Malaysian ringgit. Are you all done writing this, friends? Can I go to the next part? All right, friends. So we have got BQ, BP, SQ, SP, SH, SR. So now the next thing we have to find out from the data given over here is we have to find out the AQ, AP for sales, AQ, AP for X, and AH, AR also we need to find out. So I'll just continue writing. I will write down AQ as far as the sales is concerned. They have told 2000 units only. So SQ and AQ, is there any difference? No. Friends, if BQ and AQ are exactly the same, how much will be the volume variance? Come on, use your common sense and tell me. If BQ and AQ are the same, the volume variance will be 0. Everybody clear? Okay. Then actual price, let us find out. 158,000 they have got. So 158,000 divided by 2000 means they have got 79 RF. This is for sales variance. Alright. Then again AQ for material also is given over here. How much is that? 21,600. And AP for material. These two are for material. AP will be 97.2 into 1000 divided by 21,600. That is turning out to be 4.5. AH is also given. How much is that? 11,600 hours. And AR is also given over there. AR will be 34.8. 34.8 divided by, that will be 3 RM per hour. Can you update this in your books now, friends? All right, friends. Everybody's done writing this. So once you're done writing this, from this, friends, ideally we can find out the sales variance. We can also find out the what variance, friends? We can find out the material variance. Wait, Ashwini is still writing. Let her finish writing this. I believe everybody is done writing this. Now let me go to the next part. All right. Let's read through the down part. In total, see if you look at this, the standard contribution was 13, that too for 2000 units. Take your calculator and tell me what is 2000 into 13. What is 2000 into 13? 26,000. What's the actual turn contribution that they have got? 26,000. So actual and budget is ideally the same. Everybody clear? Down they have told in total the performance agreed with the budget. However, in every aspect other than the volume, there were huge differences. Sales were made at what was supposed to be the highest price, but we now feel that we could have sold for 82.5. Friends, what is the actual selling price? 79. They are saying they could have sold for 82.5. So what is this 82.5 now? It is the RBP, budgeted price, right? BQ into BP, right? This is the selling price that we are talking about, correct? So I'll write down the next working note. Analysis of revised data. In that you can write down RBP. Revised budgeted price is turning out to be 82.5 with no adverse effect on the volume. The circuit X cost was anticipated at the time I was prepared at 2.5. However, wait, 2.5 is what we took over here. No, we took it as 4.5. How much was SQ? Yes, 2.5, correct. That is given over here. Let's continue reading. The general market price was 4.25. So that 4.25 is what we call it as RSP. That turns out to be the 4.25. Everybody clear with this part? Okay. Next one. Circuit designers have the responsibility of designing electronic circuits that made up the electrical system. Circuit designers' cost rose dramatically with the increasing demand, and generally the market rate was 3.125. Now it is turning out to be 3. So RSH, revised standard rate, that was how much? 3.125. So friends, once you get these details, okay, in my opinion, it's not necessary to measure the quarterly performance through variance analysis. Further, our operations are fully efficient as the final contribution is equal to the budget. So friends, once you get this data, what are you supposed to do now? Can we find out the planning variances and the operating variances separately? Am I right? Please write down this in your books first. Deepa, yesterday's recording is not available. What about today morning's recording? Somebody had told even that was not available. Ashwini, what is RUP? I think you meant RBP, right? Today's first session is available, second session is not available, is it? My dear friends, what is the problem? If the credits are over, then the recordings won't be there, but that's not possible. Not sure how to check the credits. One moment. June 8th. June 8th, there was a technical glitch. I agree with that. 5-7. 5-7. Both the videos are there. Just cross check now. 47 minutes, and this is also there. 5-7. This 47-minute video. No compatible source was found for this media. So you mean the second session is not available, is it? And yesterday evening's lecture is also not available. 4th September. Yeah, that is this one, right? Let's click on it. It's there. We have spoken about visualization. Yes, yesterday's session is there. I think today morning's one session is maybe still it is getting uploaded. Let's just wait and see. Otherwise, I'll upload the backup video with you. 47 minutes introduction, that's also available. This is the video which is not available. We'll just see what has happened here. Okay. Another, which one is missing, Anaga? What date? Today morning only 2 sessions were there, right? Okay, this is session 2. The session 1 is missing. I agree. That is this one. I'll check that and get back to you. Maybe by tomorrow, if it doesn't come, I'll upload the backup video. Apart from that, no other video is missing, right? All right. Fine. Let me check if I can check my credits anywhere. Not seen, friends. I'll just check and get back to you on that. So, I'm not very good at this. Leave it. We'll check that. Anyways, I believe there is credits. We have recharged for sufficient and we have kept. We will get back. Okay. Leave it, Rishi. We'll waste our time if we go to that. Now, friends, once you are done with this, write down the next working note heading, sales variance. So when you do sales now, part 1, you will do planning variance. And part 2, what will you do? You will do operational variance. So what will be the table format for planning variance? I'll just get back to you. RSP is revised standard price RSR is revised standard rate. One is for labor. This one is for labor. Is that your doubt? This one is for labor. This one is for material variance. And this one is for sales variance. Okay? Note it down. Got it? All right. So when you do planning variance, the first table will be BQ into BP, RBQ into RBP, RBQ into BP. And when you do the operational variance, it will be RBQ into RBP, AQ into AP, AQ into RBP. Can you do this on your own now and tell me the answers? Yeah, RBQ is not given, so it's the same as BQ, no change at all. All right, friends. What is the answer you get over here? Minus 657. Minus 65. I didn't get it. Please repeat once again. Okay, so do you get the answer as 65,000 adverse over here? All right, and then you have 7,000 coming over here, is it? No, I didn't follow. Minus 65,000 adverse. And inside this, what about the price variance and the usage and the volume variance? So that is 65,000 completely attributable to price, and 0 is what is coming over here, is it? Okay, okay. And what about for the operational variance? Can someone please raise your hands and explain to me? I'm not following. It is 7,000 favorable or adverse? 7,000 favorable, and the entire 7,000 is favorable, and this one is 0, is it? Yeah. All right. So if I take these two things together to a top point, I'll be getting the answer as 58,000 adverse. Am I right? 7,000 is adverse or favorable? Is that also adverse? One moment here, you are all confusing me. BQ into BP, RBQ into RBP. Now what has happened? The budgeted quantity is not changing. Okay, it was how much? 2,000 units. It will remain at 2,000 multiplied by what was the budgeted price? Budgeted price was 50. So how much is 2000 into 50? Do you get the answer as 1 lakh? And what about RBQ into RBP? RBQ is revised budgeted quantity. That will turn out to be 2000. But the revised budgeted price is turning out to be how much? 82.5. Am I right? Right? So what's the answer you get over here? You get 1,65,000. Correct? Okay, so now the formula will be 1 minus 2. It is 65,000 favorable, my dear friends. I explained this to you. It is favorable. Understood? This is favorable. And in that case, the other one would be adverse. 7,000 adverse. Are you all clear with this? So when you come take up these two together, you get the overall adverse as how much? 58,000 favorable is what you get over here. Correct? All right. 58,000. Everybody is clear with this part? Okay. So just like you did for sales variance, can you do the same thing for material variance now? Here the table format will be SQ into SP, RSQ into RSP, RSQ into SP. That will be planning. And the other one will be RSQ into RSP, AQ into AP, AQ into RSP. All right. Can you do the same thing over here now? There is an online fighting. My dear friends, please cool down. My dear friends, online fighting. Shiv Shankar is in checkmate. Friends, have you all got the answer? Text messages don't convey emotions. Use smiley, Anshuman. They will convey all the emotions. See, Shiv Shankar has already used a crying smiley. Now come to the solution, my dear friends. What is the answer you have got? Ashwini, you have got 35,000 adverse. All right. What about the second one? 35 adverse, 0 here. And here you are getting 12,200 adverse, is it? 5,400 adverse. These numbers don't look familiar to me. Others, please do it and tell me whether you are also getting the same answer. I'll check it in the meanwhile. Let's hope I have not done it incorrectly. Let's just check one moment. Number is just not familiar. We are doing question on Kony, right? Yes, correct. 43,200. Operational variance you get 5,400, 6,800. Yes, that is correct. Very good. Okay, Anika, I'll just put the numbers over here so that you understand. Rest is all procedure, right? I'll put the numbers here. The answer is correct. Nothing wrong in the answer. So we were doing SQ into SP. How much was SQ, friends? First one, it was 10 into 2.5. So this one is 10 into 2.5. RSQ also is not changing. Only instead of 2.5, the RSP is 4.25. So it will be again 10 into 2.5. So there won't be any change over there. This one would be 10 into 4.25 is what I'll start with. AQ was how much? Okay, you will not take 10. You will take based on actual output. So it will be 2000 into 10. 2000 into 10. 2000 into 10. Okay. And here also it will be 2000 into 10 into 4.25. AQ is given as how much? 21,600 is it? And 4.5. So this one will be 21,600 into 4.5 and so on. Please try doing it this way. You will get the right answer. Are you all done with this part, friends? Anaga, are you clear now? Can I go to the next part? What is that 5085? Is that for labor, Ashwini? I think everybody is still doing. I'll slow down. Let them finish. I'm not rushing because this chapter, first of all, is a little tricky. Anaga, you're still confused? Can you please raise your hands, Anaga? 20,000 into 2.5 will be 50,000. 20,000 into 4.25 would be, that would be 85,000. Okay. Into 2.5 would be 50,000. Just a moment. So you would get 35,000 adverse, and that entire thing will come over here, and this one will be 0. Very simple and straightforward. Anaga? Yes, Anaga.
So basically here if the standard one, I mean the standard price is lesser than the revised one, it is adverse. But in case of the sales, it is favorable.
Correct. Sales
Is
is
it correct?
income. This is expense.
Yeah, correct. Okay, this is where I got little confused.
All right. All right. Fine. Okay. Okay, Anaga. Thank you. Everybody is done with the material part. Can I go to the next part now? All right. The next one is what? Labor. What will be the table format? SH into SR, RSH into RSR, RSH, RSH into SR. That will be the first one. Here you will have RSH into RSR, AH into AR, AH into RSR. Okay, do you want my help? 2000 units into 6 hours will be 12,000 hours. So 12,000 hours into what is the standard rate that is told over here? 2. This will also be 12,000 into, in the place of 2, now the rate has gone up to 2.5. No, not that one. I think 3.125. 3.125. Here it will be 12,000 into 2 again. Right? And the actual hours turned out to be 11,006. This one would be again 12,000 into 3.125. 11,600 into AR was how much? 3. So there is a saving compared to 3.125. 11,600 into 3.125. Please do this, friends. Shiva is literally killed today, friends. Shiva made Maggie. The standard hours for Maggie will be 2 minutes. Actual hours taken by Shiva. He's got some Vastu problem, my dear friends. Actual hours 20 minutes. Efficiency variance, my dear friends. Come on, do this and tell me the answer now. I believe everybody is done with this. Do you get the answer as 13,500 adverse over here? All right, and then that will be here also 13,500 adverse, and nothing will come here. The other one was 2,700 favorable, is it? Okay, so inside this you had 1450 and 1250. Is everybody done writing this, friends? Anybody still writing? Please let me know. Everybody is done, right? So once you are done with this, once we get all the variances, what do? We can go and do the reconciliation. Am I right? Now what we'll do is we'll do the reconciliation. We can use any method. Which method will you prefer to use over here, friends? Marginal costing method or absorption costing method? In this question, we will use marginal costing because they have given only the details about contribution. They haven't given any details about the fixed overhead. Am I right? They haven't given. Okay, so we only have the budgeted contribution. So I'll write down point number A, budgeted contribution. How much is the budgeted contribution? 2000 units multiplied by 13. Do you get the answer as 26,000 RM? Okay. Now to this, what do? We add or subtract all the variances. We have planning variance also. We have operational variance also. I will start with planning. Okay. So now tell me, inside planning, we will have material, we will have labor, we will have sales price variance. And tell me, friends, will we consider sales volume variance? We will take sales volume variance into what? Into the PV ratio. But in our question, sales volume variance is equal to how much? It is 0. So we don't have to worry about that part. Everybody clear with that? Now tell me, how much was the material price variance? How much was the material price variance or material cost variance in total? Was it turning out to be 65,000 adverse or favorable? You have to mention that. It was 65,000 favorable, is it? What about labor? That is sales, is it? Okay. 65,000 favorable. What about in case of material? 35,000 adverse. I'm talking about planning variance, okay? 35,000 adverse. And what about labor? 13,500 adverse. So overall, if you see, due to mistakes in planning, how much is the profit that has gone up? It has gone up by 16,500 favorable. Everybody clear so far? Same way, I'll write down point number C will be what now? Operational. Inside this, again, I will have material, I will have labor, and I will have sales price variance. I will not have sales volume, okay? Because it is 0 in the scenario. Am I right, friends? It's 0, right? It is 0. So tell me how much was material? 7,000 adverse. What about labor? 12,200 adverse. What about sales price? 5,400 adverse. All right. One minute. 12,200 adverse is material, is it? So I have made some mistake here. Sales price is 7,000. So I have written it everything topsy-turvy. Okay, tell me once again. Material, how much? Material. Sales price is 7,000 adverse. Correct? Material is 12,200 adverse. Am I right? Adverse. Right? And what about labor? Labor is 2,700 favorable. Is it? Okay. So now tell me, if you take the consolidated price of all these things, do I get the answer as 16,500 adverse? Here we get 16,500 favorable. So my actual contribution, if you see, it will remain the same as budgeted contribution, because all the benefits of planning variance that we would have got, they have went and they have destroyed in the operational variance. So tell me, this fellow, should he get any bonus? No bonus for this fellow. Kick him properly. Useless fellow. Whole benefits what they were supposed to get, he has removed it, and then he's going and telling budget and actual are tallying. Did you understand what I'm trying to tell here, friends? Please write down this in your books. Yes, friends, somebody has got a doubt. Shiv Shankar?
Sir, with respect to sales variance, why we don't take total instead of we take volume?
The logic part is yet pending. First, have you all mastered that reconciliation that I have given you?
Yes, sir, that like under which strategy how to do.
Yes, that, but you master that. Think on your own. After I finish all these things, I'll tell you the logic of how this, how the reconciliation actually happens. All right. But for that to happen, you need to get some grip on reconciliation, and your brain should come up with some answer. I just cannot give you the answer for that one. Last, after everything is over, I'll give you the whole logic in writing, that why we take sales price, we don't take sales volume. Everything I will tell you properly. Okay.
Okay,
All right.
thank you.
Thank you. Darshana, you have a doubt. Is it not 5,400 adverse rate variance in excess usage? You both added 12,200. I didn't follow, Darshana. Can you please raise your hands and tell me what you meant over here? You got it, is it? Wonderful. You want the last slide? Friends, I'm thinking tomorrow morning I'll start off again with standard costing. So we'll finish off this very soon. Tomorrow morning, tomorrow evening, Thursday morning, Thursday evening. Full standard costing khalas. Then what will be left with will only be some case studies and the case study digest. Let's do it that way. So we just have a PPT to cover, right? Introduction to SCMPE, one basic PPT is left. I'll go to the next slide. All right, friends, everybody is done with this. We can give a conclusion over here. Okay. All the favorable variants of planning has been offset in operational variance. Hence, the manager should not be given any bonus. Hence, the manager should not be given any bonus. You write down this in your books and finish it off. You want the labor variance slide, Shiv Shankar? This one? Everybody done with this? Can I go to the next question now? Time runs fast, Darshana. 4 was a homework. Did you do this as homework, friends? It's exactly the same as the other one, hence I'm not wasting my time doing this. Atulya, were you able to do this properly? Or did you find it difficult? You were able to work it out? Perfect. So then I'm not spending my time anymore on that. Let's do this question. Labor, fixed overhead is given. No, this one is activity based. I need to come to that. This is based on market share and size. Yet to do that. This question we can do, friends. It's a very easy problem. I'll give you 2 minutes, read through it, then we will solve it and we'll pack up maybe today's session with this. Come on, fast. Friends, everything is again given. We have to take SQ, SP, then there is SH, SR, AH, AR. The budgeted production was 50,000 and the actual is 52,000. SQ is based on actual output. Am I right? So I'll just give you over here, okay, analysis of variance. Roman number 1, we'll start with sales. So what do we need for sales? BQ, BP, AQ, AP. Am I right? So the budgeted production is going to be 50,000. But I don't think they have given selling price in the question. Have they given? So that's not relevant here. Ignore that. We'll do the second one. What is the second one? Material. That will be SQ, SP, AQ, AP. SQ is based on actual output. So this will turn out to be 52,000 kg and this will turn out to be 20 rupees per kg. AQ is given down. Have they given the AQ somewhere? They have given the AQ into AP is given. AQ into AP is given. Okay, that's turning out to be 10,65,600. So I think this data is not available. So we'll ignore it for time being because, but it's relevant for, they haven't given it. So we don't have any choice but to ignore it. All right. So we'll just ignore that part. For labor, they have given, we have to find out SH, SR, AH, and what is the last one? AR. SH is again based on actual output. So 52,000 into 6. Tell me, friends, how much is going to be? That will be 3,12,000. 3,12,000 hours. SR is turning out to be how much? That will be 8 rupees per hour. Actual hours is 3 lakh hours. And the actual rate will turn out to be 8.14. Right? Write down this, find out the variances and finish it off. Variable overhead is also given. So wait, we have to do variable overhead also. Roman number 4, variable overhead, SH, SR, AH, AR. So I told you SH and AH will be the same as labor because whenever the labor will work, cooking gas will also work. This one will turn out to be 3 lakh hours. Okay, and then the variable overhead they have given it as 24, so that will be 24 rupees per unit divided by 6 hours. It will be the same, that will be 4 rupees per hour. AR is not required, instead we'll just put the AH into AR. That is how much? 12 lakh 28,000. Friends, please put this and find out all the variances that is possible and tell me the answer in the chat box. What is LEV? Labor efficiency variance, is it? They've asked only labor in the question, is it? Fine, here you can do material also, nothing wrong. Friends, tomorrow morning also we'll do standard costing only, okay? Let's finish it in one shot now. So tomorrow is Wednesday, Thursday. Hopefully by Thursday evening, we would have completed the entire standard costing, all right? And then Saturday will be a full day of case study digest and the case studies. This problem we were doing, right? No. What was the question number? 9, is it? Do you get this answer, friends? 42,000 adverse and 96,000 favorable? Perfect. All right. So, friends, we are done with this question also. Next question will take. You want the basic data slide once? You mean this one, Shiv Shankar? Fine, friends. You want this slide also? Fine, friends. I believe you're all done with this. So, shall we pack up our session with this now? Let's go and have some good sleep. Tomorrow morning, we'll be again cracking standard costing problems. So, see you tomorrow morning, friends. Have a lovely sleep. Take care. Good night.